We do anywhere from the single family home all the way up to our teams. The biggest one that our team's done so far is around a 72 unit project right now under construction right now.
So I can start. Everybody, welcome to another Wednesday webinar. This is for real estate investors. It doesn't matter what stage you are. We try to sometimes go slow. If you have any question, you can always throw it in. The purpose here is for you to learn how to invest in real estate. So we are, the second page I have on your presentation, I hope all of you can see it. It is the goal for this webinar. And as you all know, my goal here is to invite people, or sometimes I go on the webinar and talking about different aspects of real estate, whether it's real estate news or techniques or strategies that we always use. So the goal here is to move you from wherever you are to make you a savvy investor. And I personally do not believe in one only possible way to invest and make money. There are different ways, all depends to your situation. So here's my goal here is to make sure you're not a shaky real estate investor that's moving to the left and right because of the news you hear, but to help you to find a clear way and draw your map and take the actions and steps towards that direction. And that's how you can become successful. Quickly, a little bit of the market news in Toronto. What's happening for those of you who weren't here last week. The real estate market transaction compared to last year, 2019 September, we are 11% more, actually 11,000, is that 11? No, 42% more than the transaction we had last year. Remember, in GTA, in average, every year, we should land somewhere around 90,000 transactions. So we are very much bang on the goal. And by the way, this $90,000 is something that the city of Toronto is hoping to have. So if we are falling far beyond, they're going to open up some better way to smooth down the transaction to get to that $90,000. There is more than a few $1 billion of tax in there. So that's what the encouragement is. Here is the selling price. If some of you were surprised that the COVID-19 decreased the price or market crash, well, we went up 14% compared to last year, and we are doing very well in that term. Here's another graph for you for housing market. These are the comparable compared to 2017, 18, 19, 20, and these are the number of transactions happening. We are very well doing. Now we are compensating for the month of April and May that the sales were low. Now we are doing very well. Now this is the new home listing ratio, means whatever came up on the market selling or doesn't sell. As you know, as you can see, we are very much in the right direction compared to previous years. Now this is resale home price. The price went up, well, based on what we see here. Even the month of March, April, May, despite of what everybody thought could be, waiting for a wave number 1 or 2 of COVID-19. Listen, the price continued going up. Doesn't matter what you believe. You have to look at the fact, not only the facts, but also the emotional trend of the market to understand why the market is moving up. This is the news I picked today. Is that Toronto real estate market enters the second wave on a high. This is very true. The market, even though it was very strong, I know in the COVID time, 1 out of every 4 transactions were multiple offers, bidding war. But now, in a typical trend of the market for the fall and winter, the market has slowed down a little bit. So it's not anymore seller's market. Now we have a very balanced market, and we're predicting that market of the balanced market will continue for the rest of the year and next year. Now, learning tools and materials for some of you that weren't here for sometimes, you can go on my YouTube channel. There are a ton of videos and educational material that I put there that you can listen to and learn from it. It's free for you guys. Same thing for my Facebook for investors. Go there. Sometimes I have private selling. You can always go and take advantage, or you can contact me. Actually, I have one private sales that came up today. I have to put it up there. These are the reading material that I published in the past. And if I'm working on the next one, yes, to be honest with you, to put a book together, I believe in writing it myself, not outsourcing to writing. So it takes a little bit of time. So yes, I'm working on the next book, but it's going to take another few years for that one to come up. And voila, our special guest today is Mathieu. How do you spell your last name? Laquerre?
Laquerre, exactly.
Laquerre. Okay. So you're coming from Ottawa.
Yeah.
Okay, excellent. And you are the partner or the founder of MADA. What MADA stands for?
It's a long story. I was trying to figure out a name that I could trademark. So MA means for Matt, and DA was for my wife's name, but my business partner is David, so it kind of goes both ways. So
excellent. So thank you very much, Mathieu, for accepting my invitation and came up on the webinar. This is the second time you're coming here, and I really appreciate and enjoy the first one. Now today I asked Mathieu to come along and share with us, tell us a little bit of your story, how you started, and then our focus here is to eventually how you got partners or joint venture partners, whatever, to come along and help you financially, and they were captured with your vision. And go on, take the stage.
all right, can you let me share my screen, because I kind of built my story in this presentation that you wanted me to share with everybody. All right, guys. So my name is Mathieu Laquerre. Thank you so much, Ashton, for having me. I don't really do these webinars that often, so I'm excited to be able to share my story with you guys on kind of my journey in real estate, and also on what we're doing as a company to raise capital, especially with COVID. We shifted big time the direction of how we're doing things. So I'm kind of excited to actually be presenting this, because I've been working on this for a few months now. So just a disclaimer, we're just here to give you guys some information. All the bit of information we're giving you, just consult an accountant, attorney, and so forth. Just like to protect myself that way. All right. So we're all here basically tonight to learn, how to build wealth through real estate. And if you haven't started it here, I'm going to show you how to kind of scale your business, and to show you guys what we've done and how we're doing to scale our business on real estate. So great quote I love is buy land and not make it anymore. It's a Mark Twain quote. Big believer in that real estate can change life, can change a lot of people's lives if you do the right things in investing. So a little bit about myself. I'm a full-time investor since February. I've been doing it on and off for around 10 years. And I'm the managing partner of MADA Partners. Essentially, I got into real estate by accident. Before I even knew I had a business, before I even knew how to evaluate a deal. So I was living in one of the properties on the left here. I started out with a townhouse, and I wanted to upgrade and get a bigger house. And I had a friend approach me saying he's looking for a place to rent. And I had 2 years left on my mortgage. Instead of breaking the mortgage, I put him in, rented out the place below market value. And that's kind of how I got into real estate. Those are the first few deals that kind of made me realize that I got a business. But one thing I learned is you never rent the friends and family. So renting it to a buddy of mine, he left the place. It was a brand new place, $15,000 worth of damage later on the property. So I started in 2009. Started investing in in the city of Ottawa. Then I started investing in New Brunswick in 2013. And then in 2015, I brought on a mentor to help me scale my business. And I started investing in the US in 2015. And now we're doing on average 12 to 15 transactions a year with their own money and other people's money. So basically, these are the things that I find that a lot of people, they think real estate's easy. You see it on HGTV. So these are the things that I find that you need to commit to. if you want to start investing in real estate and raising capital. So you got to, first of all, invest in your education. You got to read. I find, I'm always learning. I'm always trying to learn about real estate. So I joined also a local real estate investor group. So people that are online, that's the way to start, is to surround yourself with a whole bunch of people that are doing it. You want to start analyzing deals and make offers. You want to go to seminars, get a mentor, networking. You got to watch out about networking, because sometimes you'll spin your tires. You got to, look at the events that you want to do and find the people that go there that you want to be connected to, and you want to stay committed. So how do you get good? Basically, it's practice, becoming part of the right community. You'll hear me say that quite a bit. Asking the right questions to the expert that do this on a daily basis, and attending syndication conferences and so forth. So one thing I learned in real estate is you run out of money quite quick when you do it on your own without bringing in partners. So this is kind of how my journey started. So essentially, I ran out of money. I approached my business partner, now that was my lawyer, realized that it was a team sport. I'm learning every day about, how to raise money and raising capital. Those are the hardest things. But I find if you have, a deal, the team, or the money, all three of those elements, everything comes together in one. So my first part to scale my business is I actually approached my lawyer at the time, and now he's my partner. His name is David, and that's kind of how I scale my business. I brought in one partner, and then we kind of grew it. And then part of having a partner that helps you out grow, it's all about finding the right team, the right people. So I got Dave, he's my lawyer. We don't use him as in-house lawyer, but we use him as to go over the contracts and so forth. And then we have JP. He's also our business lawyer. But the great thing about having a great team is that JP's got a phenomenal story. He was involved with Elon Musk on one of his early on startups. He moved to the US when Elon exited his first company. Elon made 65 million. JP made a little bit of money, and that's kind of how he started his career. But he's a really good business guy for law in Canada and in the US. I try to surround myself with a lot of people. You got to learn as much as you can. So there's Robert Helms and Russell Gray, the Real Estate Guy Show, Dave Wilson, Master of Flips, George Ross, that's Bush Trump's attorney. But that's kind of, I try to travel or do a lot of conferences just to be in the room with a lot of people that are better at raising capital than I am, because it's a learning game. So I'm going to talk to you guys a little bit. I know you guys are more Canadian guys, but my main focus is in the U.S. So I'll kind of talk about my journey, because investing in the U.S. is a little bit different than Canada, and you have a little bit more objections when people, you're especially when you're investing out of country. So there's basically 4 benefits that we like about the U.S. Real estate. So one is basically accessibility. So it's a low entry cost to do multiple deals. Capital growth potential. So high rental returns, capital growth, which helps you build equity a lot faster, I find, over time than in Canada. Diversification, one of the biggest markets in the world that offers you a lot more possibilities with a lot less capital. Taxes, there's a little bit more advantages in the US. So these are just basic numbers not from Toronto, from Ottawa. They might be off a little bit because I haven't been active in my city for investing. But if you compare, let's say, Canada to the US for soft costs, you're $50K in Canada versus in the US, you're $20K US. So even though with the exchange rate, you're still ahead of the game. My hard cost to build in the US when I first started was around $97. We're around 117 to 125 per square feet versus $240 on average in Ottawa. So just an example of a small deal that we've done in the past. So our initial capital was $150,000 US investment. We added a third story to the building, made it a 6-unit. We refinanced the property within 14 months and sold it off 16 months later and made $103,000 profit in 16 months worth of work. So basically, these are the types of projects and type of investments that I'm doing a lot. So we got shovel ready. Basically, it's just buying land, getting the plans, the permits in place, and just selling those off to other developers. Building the block. So our team does quite a bit of land assembly. So we'll buy a few parcels of land. It'll go anywhere from doing 6-unit, 12 units to 24-unit townhouse developments and more. Rehabs, kind of like the same stuff that you see on HGTV, but it takes a lot longer when you're doing it than a 30-minute show on TV. And then we got the facelift, kind of like the project I presented to you. We kind of use the existing shell and build from there and try to recycle the building and go from there. U.S. tax advantage. So there's a couple things that we like about the U.S. that I've been good at doing, and that's how I started raising capital, was kind of using those tax incentives to make it a benefit for whoever you're bringing on as a partner with you. So there's opportunity zone tax abatement, there's 1031s, but I won't get into that because it's a little bit more complicated. So basically, an opportunity zone, basically, it's a tax credit in a distressed community. So when you receive the tax credit, you can defer your capital gains if you invest it for 5 years or more. And after 5 years, you get a 10% step-up basis. And that program is in place until December 31st, 2026. A lot of the properties we do, our strategy is you hold on to the property for 10 years. And after 10 years, if you sell the property, there's no federal tax on appreciation of the property. So that's a great thing that we use to pitch when we're attracting capital. It depends on the exit strategy, and you're able to refinance the property too with this strategy too. And then tax abatement. So I'm going to show you guys a property here in Philadelphia, but look, when you add what happens when you add $110,000 of value to the property. So this is just a basic property. So you'll see in 2014 to 2016, there's no activity on this property, and it was worth $6,700 with the city. And property tax in Philadelphia that we're investing in is around 1.4%. So on that, it was around $94 a year. We built up a $400,000 building on it, a duplex on it, and my property taxes only increased to $1,500 a year. They only tax you on the land and not on what you put on it for the next 10 years. So tax abatement is amazing and a great advantage that we like to use and we like to do when we're investing. So this is what everybody came on today. So raising capital. So these are the things that we're doing as a team to raise capital. And these are what I've learned through my mentors. And I'm going to be sharing those with you. So, you got to meet the legal requirements, and there's literally 5 principles that we believe in. And then you just got to get into the action, got to get into the game and do it, go out there and raise capital. The first time I raised capital, I thought it was the easiest thing. My first meeting with my mentor and my business partner, Dave, was like, it was like, where do I sign on the dollar line? No questions asked. Let's do it. But it's not the case. it takes a lot of no's to understand what you need to do to get better at this. So essentially, we want to use other people's money, and you always got to look at it as you're doing a service to other people. The misconception of, raising capital and using other people's money is we always think that we have the best deal, but sometimes it's not about the deal. It's about the alignment with your investor. And I'll kind of go through that down here. So one, you want to be able to spread the wealth. Your vision's bigger than your wallets. You want to divide the risk, and you want to build your resume and create the ultimate wealth for yourself down the road. So one thing that's very, very important, I find, that I should have done a little bit earlier on, is branding. So, your branding. So you want to take your real estate to new heights with it. You want to bring a solution, not your needs. And that's kind of how you got to look at the whole way of raising capital. You got to find the solution for the other potential clients, your potential investors. You got to be a farmer, not a hunter. So I'm going to kind of go over a few things. One thing I like to stress is make sure you get yourself a domain name. It's kind of like real estate, location. Get a domain name, doesn't cost much. Especially get your personal name, protected.com.ca, and go from there. So when you're raising capital, there's some key factors that you need to know. So who's your target market? What do they need? Where do they congregate? Who and what influences them? Where do the influencers congregate? Who and what influences the influencers? What do the influencers need? What is your angle? And this is very, very important. Is I find you got to be able to answer those questions. We just redid our business plan during COVID, and I included all that stuff in my marketing. You got to really know your sweet spot and how you're going to attract capital to make things easier for you and for your investors. So this is basically the 5 principles that you need to attract capital. So knowledge is one of the key elements that you need to raise capital. It's very, very hard if you don't have them. So you got to have relationships, trust, credibility, results, compelling opportunity, and alignment. So, and that's where a lot, and I talked about it briefly, and that's where a lot of people will make mistakes, is the compelling opportunity. It's never really about the deal. It's just how all the mechanics get done on the back scene. So relationship. People invest into people they know. You got to have strong relationship. How well do you know your capital partners? So people don't want to feel like they're being used. So that's the biggest mistake people do. I've been there, done that before with some of the high net worth individuals that I've spoken to. You got to be able to build a relationship. And building a relationship is not just necessarily about finding capital. It's, it can be somebody that you want to be introduced to. So it's an introduction. It could be credibility. It can be, you can call them up for advice. It could be for, once again, access to capital. And at the end of the day, you're friends. Like at the end of the day, when I say we're friends, is a lot of my investors or people that are on board with me, they can be higher. They got maybe a higher education, or we became friends. And if I have to pick their brain, I pick their brain. And usually it's a win-win situation because you bring value and you can trade off on that stuff to make sure you're successful. And you got to make sure you have a great foundation before anything happens. It's not an overnight thing. Sometimes it can be an easy phone call to get the yes, or sometimes it might take you 2 years to raise capital. And during COVID, I finally got a yes from one of my investors I've been prospecting for a long time. Trust. So it's earned over time. You can't manipulate it. You need to chip at it little by little. So these are kind of things that, when people are going to want to invest with you, they want to know, can they trust you? Do you have credibility? So are your values and intentions the same? Can I trust you with my money? Can I trust you to hire the proper team? Can I trust you to keep the small commitments? It's all about the follow-up too. If you're going to say you're going to send out the report, you send out the report. If you're going to do things when you're building these relationships with people, the little things are what matters the most. How are you going to perform under stress? These are things that people need to know, and you got to be upfront. You got to be upfront about it. I'll come back to that actually later on. I have a story about that might help people about trust. Results and track record. So people think when you get into real estate that you're okay. I have zero track record. How can I get people to believe in me? And I go back to when I first got my mentor. I wasn't a professional investor. I wasn't fluid in investing, but I made my mistakes in the past. But having a mentor, I was able to borrow his track record and his credibility to help me grow and to help me gain some results. So I borrowed basically his results. So, so results and track record. How many investor references can you give? How many projects like this have you completed? How do you react when there problems arise? Have you lost investors' money and made it right? So that's very, very important. I'll tell you guys a little story about, results. We had a project that got delayed, and we underperformed to one of our investors. And to make it up to him, what we did the right thing. We actually gave him a 10% equity in another project with zero money down, just because we were running behind schedule. So, we have the track record. We're still successful in the other project. It just took a lot longer to give him back his capital. So we kind of made things right on that one. Compelling opportunities. So it's got to be simple. Does it have too many moving parts? Sometimes when we build these deals, we make them overcomplicated. You got to make it simple to execute and simple to go through and to explain it. So these are kind of questions that a lot of investors will ask themselves before they want to invest with you. Is the opportunity straightforward? And you want to be able to explain it, make it simple. Is it straightforward? Is it a no-brainer? These are all key things that you need to have. And you'll see my next slide. I didn't bring it up, but if you have all those together, then you have the perfect alignment. And that's usually when you get the commitment letter to move forward in the project. So capital sources. So a lot of people are struggling sometimes, how can I find money to raise capital? But, it's not just your friends, your family, your personal network. There's retirement account, family offices, institutional equity, and other syndicator that raise capital too. Sometimes those people don't have deals to put their investors in, so you can easily partner up with those people to grow your business. And that's a good source too. And you get to learn too if you partner up with other syndicator. They'll tell you what they're working on and so forth. But you can definitely learn from them. And then we've got the technology. That's one thing that I've just implemented in my everyday business that we weren't doing before. And you got to kind of look at raising capital as a business. You got to be able to track all your communication. So we've implemented like a CRM, an appointment management. So the minute they book online with their appointment, and all the information gets inputted automatically in the CRM. And a lot of this stuff that I'm using, it's free, or it doesn't cost you that much money. but there's a lot of things to really, really help you build a profile on these people that you're talking to, you meet. I try to figure out when their birthday is, they have a wife and kids. So they're just notes that, because we're in the people business, sometimes we forget a bit of things, and then you have your notes on hand to reference to. But these are all little things that we're doing. So I'm not too sure if people want to see this, but I've also kind of have like a little bit of a template that we've kind of did for our investors when we do when we talk to them over the phone or after we have a conversation, and we call it the onboarding. So kind of things to expect from us. That's a great way to kind of manage the expectations of people. So I've broken out in 4 sections. So I'll just share the document. We just redesigned our document not too long ago, the last couple of weeks. So, what we do. So we just kind of talk about, we're a private equity firm, we're a syndication company, and we're looking to grow with partners. We invest in rehabs all the way to new construction, multifamily development, 70 units and up. We invest in distressed properties. We focus in Philadelphia. So it kind of gives you kind of an underline of what the business is all about. If people aren't too sure about real estate, we got our investment criteria, our timelines, our exit strategy, our returns, our team. We just talk about, all these things that people might not know about you, or that they're looking to get simple answers to. So we try to make it as simple as possible on the documentation. So types of projects, the partnership, how we assist our partners to making the right decision on investing with us, or experience or track record. A great thing, what I like about here is a lot of people are like, okay, we're going to save you time because we have the team, we have the properties under contract. We have the compliance, we have the legal, we have the accounting firms. So a lot of these things, people want to know, and we're as transparent as it can be. I try to do every 2 days, I do an investors reporting. They get to see live pictures of all our projects. They get to see the good and the bad, but we try to be as transparent as possible. So we got the onboarding, we talk about alignment, the setup, and we just want to build long-term real estate partnerships with people. So that's kind of what we do. I can go into more details, but that's just kind of the gist of what we do on an everyday basis. And we're using LinkedIn too to create relationships too. I didn't bring that up. But we've been implementing some great new strategies lately that's helped us grow and get more prospect in our funnel.
Perfect. Matthew, I have a question for you. Actually, I have a few questions here. In terms of what I hear all the time from all the investors, including myself, I can bring it up, is there are 2 elements here. One is exposure, the other one is relationship. And I continuously hear that from all the investors looking for partners. You have to go out and expose yourself and tell what you're doing, and then establish some relationship. And you mentioned the very same thing again. Now, are you actively spending time on a daily basis looking for a partner? And I'm talking about not necessarily today, maybe you have your partners, but let's say, generally speaking, from beginning, where you wake up in the morning and say, now I have to find 2 partners. Is that the way it works for you?
So we have a team. So the way we do our business, we just partner with developers with a track record. And we have 2 structures. We either do 50-50 partnership on the development, or we can own 100% of the project, but then they're going to charge us developer fees and et cetera, but we can own 100% of the project. So we've been using our own money and a few investors for now. But since I've now focused on the business full time, that's all we want to do. My job is to be in front of as many people as possible, to talk to as many people as possible, and to tell them, hey, we have an opportunity. let me talk to you what we have and go from there and see if there's an alignment. If there's no alignment, so be it. But that's what we're doing every day now is our partners have enough land to develop over 400 units. So we've got enough land for the next 3 years right now.
Great. David was your very first partner, right?
Yeah.
The lawyer. Now, I think at that point you were at the beginning of stage, and this is a thanks I'm sharing with the audience here. Now, did David approach you, seeing what you're doing, or you talked to David, said, "Listen, let's do something together"? How did it work?
I approached him personally. So he was doing all my I was doing a lot of outside I was doing a lot of investing in New Brunswick, and Dave was notarizing all my documents for the law firms in New Brunswick that we're using. And Dave was seeing, you know, all these deals come on his desk, and I told him like, "Hey, let's go out for dinner." And then he always told me since I've known him for around 15 years now, he's always said to me, "I've always knew that you would do bigger and better things." You know, me and Dave have a bit of an age difference too. So I'm kind of the everyday guy behind the business. He's the managing partner of one of the bigger law firms here in our city. So he's a busy guy. But I try to take care of all the relationships up front. So part of like the branding and part about talking about raising capital. So we just created a new product. It's called the wealthylawyer.com. The website's up, but it's not 100% running. It'll be running in the next 3 days. But basically we're telling Dave, we're approaching lawyers. I'm approaching lawyers, selling Dave's story to everybody else. Hey, look, Dave is a busy guy. He doesn't have time to take care of your operations, to build capital. And I'm going to tell them how I built, we're going to tell the story how I made lots of money for Dave. And that's kind of how we're doing it. You know, so we're trying to off branding ourselves a little bit. You know, I've been trading under Matt Partner, but now I have a new website called tofinderstrategy.com. So there's multitude of more websites that we're in the works of building, but we're trying to build a brand. And at the end of the day, I want to educate people with all the information that we're able to get for free. And all these people that, you know, we pay to get work done. You know, I'm redoing my US structure right now, and I'm excited about that because I'm only going to be paying around 5% tax moving forward. So those guys that we hire to do all the work, the legwork for us, I get them to speak at events that I'm doing. Like I do webinars like you do too in my city and so forth. And these are little things like that we need to do as an investor to grow personally and to grow and attract more capital.
Excellent. Now, in terms of the percentage of what you do in terms of activities, you mostly building properties, or you kind of fix and flip, you buy and hold? What the strategy do you do majorly?
So we got sidetracked a little bit. We were originally doing 50-50 new construction and some rehab flips, shovel ready projects, just to create some cash coming in. And then we went around 90% just short-term stuff, so new construction, townhouses, flips. But we're going back to a more balanced portfolio, just because right now there's too much uncertainty in the market, especially in the US. But we focus on price point properties when we're doing flips, not on our new construction. So we've had a great success rate. I got 3 more properties in the market at the end of the month, and we're creating a market in a neighborhood where there used to be no market before. So we just hit the highs right now in one market. We're selling these single family homes for $300,000, fully renovated top to bottom. But we've got around 9 more in that neighborhood, but we're going to have, we're doing a lot like that. Sorry.
Excellent. Seeing you for the first time, Matthew, I'm fascinated with what you do. I'm going to ask you this question. Okay, I want to start doing something. How can I eliminate the mistakes or the risk along the way? Like this, let's say as an investor, this is my first page of investment. How can I not fall into the pitfalls ahead of me? Do you have any suggestions for new investors?
So as an investor, I think at the end of the day, teamwork, teamwork, teamwork. Try to find somebody that has a track record that you can learn from them. So you might have the money, but you might not have the track record. So you go and find somebody and you partner with them, and then they've made the mistakes. You can try to do it on your own, but you're gonna learn. You're gonna be able to scale your business a lot quicker. Or if you want to do if you want to do 1 or 2 deals a year, you can do it the hard way. But sometimes the partnership is a lot easier than anything else, because you're learning at the same time. In this game of real estate, it's all about learning, and that's the biggest thing that we find has worked for us. Do we make mistakes? 100%. We still make mistakes, but you don't make the same mistakes twice. We had to reshuffle a couple of the contractors that we had recently. We didn't fire anybody, but we just, we were spreading them out too much and too many projects. So we said, okay, let's just scale down a bit. And so the quality of work is going to be a lot better. And that's what we've done. But we don't really make mistakes that much anymore. But in the past, I've made those mistakes.
Okay, excellent. And looking at the Canadian market, are you familiar with what's happening in Toronto and Ottawa? Of course, that's where you're coming from. What do you recommend if someone is local, wants to stay here, and wants to start doing something?
So to be frank, I'm not really following that much. I know the Ottawa market is it's going bananas over nothing. Like the townhouses now are like $550. But I think there might be some type of opportunities later on with the condos. I know in Toronto right now, you guys are getting flooded in the market for condos. I think there might be opportunities, not right away, but over time, I think there will be a correction in that with all the short-term rental. Yep. But like I said, I'm not very familiar with the Canadian market, because I don't spend my time in it. I just worry about my personal house, and that's it.
Okay, anyone has any questions, just jump in or raise up your hand or send a quick text through the chat. And I'm going to ask you one question, maybe someone's preparing to get in there. Is there any preferences in terms of what area in US that you are targeting for your project that's more profitable and was from the beginning and very solid market?
So look, I've been comfortable in Philadelphia for 5-6 years. We have a phenomenal team on the ground. So that's not broken. So we haven't really looked, but in December, January, and February, we were looking to start expanding in Florida by your brother's place to doing some short-term rentals. So it's been something on our mind, but with COVID, we stopped a little bit. I think there will be a bigger correction in the Florida market. The prices are starting to come down a little bit, but I still think we're 4 to 6 months away before we buy something in the short term, especially in Florida near all the tourists go. We just want to figure out what's going on too with the coronavirus. So we're a little bit hesitant right now, but we will. We're looking for deals. I was looking at a deal in Texas to do a 110 unit mobile home development. So I'm looking, but I'm very cautious how we deploy our capital right now.
Okay, excellent. And in terms of multiplexes, that's what you do as well in the US?
I do what? Excuse me? Multiplexes? Yeah, so we do anywhere from the single family home all the way up to our teams. The biggest one that our team has done so far is around a 72 unit project right now under construction right now.
Excellent. Any last message for our audience?
If you guys want to connect with me, you guys can find me on Facebook or LinkedIn. I'm happy to answer any questions. And again, it was awesome to be on your
Yeah. Thank
live.
you very much, Matthew, for coming. Matthew's phone number again is 613-715-1725. He is living in Ottawa, and you can give him a call and ask him any kind of question. And my phone number, just in case you are interested to find out more about investing in real estate, I'm doing that for 16 years. It's 647-407-4049. Again, 647-407-4049. Thank you very much, Matthew, for coming on. And thank you for everybody to attend. And hope to see you next week.
Perfect. Thank you guys
Thank you.
for having me.